Welcome to today's episode. Our topic today is investing in a hot property market, so I'm really looking forward to running through that with you. And I do have a very special guest who I'll introduce shortly, but before I do that, I'm pretty excited to also announce the launch of my new business, which is something that's led from certainly this forum, which is fantastic. We've built up a large group of investors who I've been keeping in contact with, and this business has led from that. So the business is called Launceston Property Investor Advocate, which is obviously myself, and it's an offshoot from my property management services that I'm currently offering in the marketplace. So basically the service is for investors so that they have an end-to-end support service from the search right through to the purchase of the property and the ongoing management from there. So happy to talk to anyone that's interested in that service, and you can find more information on my website, which is Launceston Property Investor Advocate, and that website will come up shortly for you online. Without further ado, I'd really like to introduce a good friend of mine, Richard Sims, who is joining me today. A little bit about Richard. Richard and his team have recently won the REIT Team of the Year, and also I believe Richard has picked up the Individual Residential Sales Person of the Year for 2020. So congratulations on that, Richard. Richard's here from Sims for Property, and he's here to talk to us about the current market and how investors can work with the current status of demand within the market in our Launceston area. So I'm finding, as an investor, someone who actually is looking for opportunities in the market at the moment, that it's very difficult to understand where to put offers forward, because we are seeing prices well in excess of the asking price or the offers over price. So Richard's here to talk to us about that. So welcome, Richard.
Thank you. Thank you.
I have a few questions for you, and this is relatively off the cuff. I think I sent you a brief yesterday, so this is not a scripted version of answering these questions. So I
ran my eyes over them this morning.
in between your busy life at the moment. So the first question, Richard, when buying in a high demand market, which we definitely have in Launceston at the moment, certainly I'm experiencing that myself. My first question is, what should the investor prepare in advance if they're looking to be competitive in the current environment?
Yeah, a fair bit actually. It's not as though that you have a good understanding or a grasp that's one, I suppose, shoe fits all process. It's not at all. It does come down to individual properties as they come to the market.
Yes.
Really, the investor needs to pretty much be very knowledgeable from the onset. Now, knowledge is power with anything in this world, and I employ a lot of people to do a lot of investors to do a lot of research. Now, research comes down to past sales. Now, take that with a pinch of salt, because what sold last, well, let's say 6 months is not going to be what's going to be relevant today.
Yeah.
Even last month at the moment is probably not going to be relevant today. So do understand probably your competition is probably one of the first things I'll probably say to people. Don't be afraid to ring up other agents that have sold a similar home that you're wanting to buy just recently, and ask the question, how many offers that were presented, and what were the underbidders and what prices, what they were. Because those buyers that missed out on that property, let's say last week, are going to be your competition on the next property.
Yeah, on that, I was actually really impressed with, I recently I didn't put an offer in on a property because I felt like it was going to be over my budget in the end, based on the fact that when I turned up to your open home, there were 49 other players in the market. And I think, and then the second you had 39 or something, I remember you saying, and I realised at that point that the property would sell well over the best offer over asking price. Yeah. But what I found really useful was that you sent a text message, and I assume you sent that to all of the interested parties, which is a lot of text messages, to say, thank you for your interest. I'm just letting you know this is what the property sold for, which was, I suppose that's an education for your buyers, so they know where the market.
Exactly, and that helps them, I suppose, be prepared for the next transaction and the next transaction and so on. So yeah, look, knowledge is very, 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 very helpful, and I think some agents are good at passing that knowledge on and some aren't, but we won't get into that.
So knowledge about the market, where properties are selling is one point, and would you also say that the other point is making sure that they have their finance looked at and approved and all of that in advance?
So contracts are pretty, it's the piece of paper that the vendor accepts, and those terms and conditions are the ones that they're going to be attractive or not. So I get people getting advice with solicitors prior to making an offer, but you also need to understand what those contracts and those clauses represent and what they mean.
Yes.
Now, in some cases, across my desk, a lot of offers that come in that are multiple. Some are subject to finance, some are cash, some are subject to due diligence. Now, the due diligence essentially clause is basically doing all the background work that they need to do to perform before they proceed.
Yes.
I get that. In relation to a vendor's point of view, they also understand from an agent advising them that that's basically a cooling off period.
Yes.
And that from a vendor's point of view, if they're weighing up contracts within their property, they have one that's going to be cash unconditional or one that's subject to due diligence. Essentially, they're uncertain with that aspect. So I suppose I get people putting those clauses in, and you've got to protect yourself, understand that, but it also has an impact on how the vendor reacts and how they're going to accept.
Yeah.
So the vendor needs to be confident, and I suppose you as a purchaser need to be confident in the property, do the research prior to, and put what you need to present in that offer as best it can.
And as you say, every property is fairly unique in that, and the advice I generally give to my investor buyers is that every property is going to be different, so you don't need a set of clauses for every property that you're going to be putting an offer in, because if you're looking at a brand new property that's newly built, you don't necessarily need to get a building inspection. Correct. Maybe you get a friend that's a builder that can have a quick look over just to check it. So there are times where you do need, if you've got a relatively old property or there might be cracks in the property, then I'd certainly give that advice. So
it's very much suit the contract and the conditions towards the property as it stands.
But the point is, what you're saying is that in a competitive market, the fewer conditions you have, the more attractive it's going to be to...
Cash is king.
Cash
is king.
In the hot market. So Richard, what are you seeing are the most common mistakes, in particular with investors, that they're making where they're missing out on those opportunities?
Okay, basic stuff, price, not understanding the market, offering too low, too many conditions. As we touched on previously, it's very, very important to understand what you're offering. And I suppose probably not mistakes, but what they can probably be doing is probably a bit more of a warranted get to know, I suppose, your agent, but also don't be afraid to attach personal notes and personal letters from a personal perspective. That, funny enough as it sounds, it actually works. I've had quite a lot of people do that of late, only just of the last 2 or 3 months. And the reaction from the vendor's perspective is, how nice this may be to actually get that more personal aspect towards it.
It's interesting you say that, because I went to an inspection with one of your team members recently where the owner was considering either renting or selling the property, and she was very specific about who she wanted to sell the property to, because she had a very unique style of property that she loved. She wanted a buyer that would love that property like her. So that's kind of interesting. Not everyone is about the dollar at the end of the day. So
most are, definitely. But if you can provide the dollar plus a personal aspect, you're starting to get a bit of connection.
Point of difference.
And very much so.
Thank you, Richard. And the other question I have here, with the offers over strategy, are you seeing in the marketplace at the moment, is there an average percentage that people are generally, because it's so hard for people to know where they should be pitching price. It's easy to say do your research, but if you don't have a lot of comparable data out there in the marketplace, it's hard to know. Are you seeing that there's a percentage that we definitely know that, well, I know from what I've looked at that properties are selling well over ask? What are you finding at the moment?
Yeah, pretty much everything is. Percentage-wise, it does depend on the property. Some are 5%, some are 10%, some are more. I suppose there's probably 2 answers to that question is, I suppose buy for the future is probably what I'm going to say first of all, is because I don't know anyone in real estate over time that has lost.
If they've held the property long enough.
Exactly. And how many people say to you, I wish I would have bought 20 years ago.
Yes.
How cheap it was back then. So as long as you can afford and uphold that value or that repayment aspect, or you buy right, You do, and in this rising market, you do need to buy probably 10 years ahead of yourself, if that's going to plug into what you want to live, as in a home.
For a home. For an investor, I guess they need to be focused on what is the return, and my advice at the moment is to make sure that they're sitting at least around the 5% return mark is what I'm seeing at the moment. You can still pick up property within that range, so anything less than that, it starts to become challenging to meet all those repayments and cover all the costs.
But in second part of this question, between 5 and 10%, unfortunately.
Unfortunately for investors.
How long that will continue, we'll wait and see.
I know that property I looked at with you, I think sold 50,000 more, 60,000 over the asking price. My next question, and obviously a hot topic at the moment, is how has the COVID pandemic impacted our local market, good or bad?
Well, it depends who's talking, who's buying, who's selling. Selling, definitely, it's been fantastic. So the reasons for it from the outset is definitely a shortage of stock. That's probably the first thing. A lot of I suppose excitement from a purchasing perspective has been driven into our market based on our, let's say, borrowing rates being so cheap. And let's face it, I'm seeing a lot of people who were renting and now getting out of renting and they're actually buying.
Yes, we've seen that too.
You can probably confer. So in that sense, the monetary rate is obviously pushing things. Our lack of stock levels is also pushing things, which has also been, I suppose, a contributor. So in that sense, it has really probably pushed our prices and want to buy safe real estate. Tasmania has been very much a talk of topic when it comes to safeness in our economy at the moment. I think I read the other day that we've led the nation for the last 2 quarters.
Wow.
Who would have thought that Tassie can lead the country? Whether that continues, we'll continue to see. But the emphasis is based on, yes, it's a safe environment. So we don't have our booms, we don't have a bust, although we are going up through one at the moment. But history-wise, we haven't had that volatility. So the COVID has definitely put that spotlight on Tassie, and that's where everyone's now becoming, Tasmanian. Lifestyle very much is going to be a big factor in the future. So a lot of lifestyle homes is very much a conversation I'm having with a lot of people who are wanting to relocate over to Tassie for the COVID reasons, safeness, fresh air, all that kind of stuff. So it's been really interesting to sit back and watch how it has changed things.
And focusing on investors, do you think obviously our borders are open now, do you feel that will again inflate our market, and is it sustainable?
The signs are yes. I can't see it going backwards, and there's all signs at the moment that's going to continue to remain strong next year. I can't see any other way unless interest rates go up. We know they're not. Our commercial side of our market, side of things is going strong. I think next year, and with our borders opening, is a more influx of more people coming into our state, and that's definitely going to be the case. So
now is probably a good time for our investors to be on the hunt because I feel like I think you mentioned earlier what's been the change in buyer demand from investors over the last 12 months?
I actually recited you a bit of information based on the REIT which came in the other week, and I found it actually really quite interesting based on the investor side of things, based on how much activity that was there. And I'll just read this, I hope you don't mind. The interstate buyers continue to maintain a low profile, acquiring just 290 properties, which is 70.7% below pre-COVID-19 levels. Traditionally, mainland buyers represent 20 to 23% of total sales, but today represents just 9.8%.
Interesting, isn't it?
Quite low.
Yeah, I have noticed that there has been a lot of activity from investors, a lot of lookers, but we haven't seen a lot of follow through from interstate investors, and I guess that's because they can't physically be here.
They can't physically, so when our borders open, that 9.3 should bounce back to at least 20, probably more. So it's interesting.
Great. Thank you so much for joining us in this episode, Richard. I think there's been a lot of valuable information there and a lot of key points to take away for investors. So we'll wrap that up, and I'd like to thank everyone for tuning in, and we'll see you in the next episode.